So I discussed the numbers with Mr. Satish Pai, the managing director of Hindalco earlier today, and began by asking him about the aluminium prices and whether or not there's a deficit in the global aluminium supply. Let's listen into what he had to say.
The aluminium market worldwide is finely balanced. It's a plus minus 100 KT market on a 77 million production of aluminium that happens. So it's true that the market is very tight. And hence, the aluminium prices are trading in a band of, which I've always maintained, between 2,300 and 2,600. So depending on how the general economic macro environment works out, the aluminium prices can very quickly start to trend upwards because then market sentiments improve. Or when the uncertainty is there, it trades at the lower end of that band between 23 and 2,400, which is what we have seen in April and May.
All right, but do you believe that by the first half of this year, we should see aluminium move towards the higher end of the band, that's around $2,600 per ton? And also, if you could give us your take on alumina prices, because that hit a low of around $330 per ton, and that quickly has bounced up because of the fear there's going to be a bauxite shortage with what's going on in Guinea. What's the outlook on alumina prices?
So, see, alumina is, as you said, very much dependent on what happens in one country, Guinea. Because Guinea is a big supplier of bauxite, both to China, Middle East, and everyone who's short of bauxite. So the volatility in what happens in that country has a big impact on alumina prices. Traditionally, alumina prices have been in the range of $350 to $400. But when there is a problem in Guinea and bauxite cannot be moved out, it jumps to $600, $700. So I think that the volatility in the alumina prices is here to stay because of what happens in Guinea.
Got it. Okay, sir. Before we get to your segmental performance, some part of the street is calling out that this was the peak performance for Hindalco for the next few quarters. What is your comment on that? Because you had everything working, right? Aluminium prices had perked up. Alumina prices as well did move up in Q4. You got the benefit of higher prices. The rupee was weaker. And now some part of that has reversed. So would you believe that Q4 is peak and now we'll see more subdued set in Q1 and Q2?
So the way I look at performance is actually a bit more simpler than that. I think that a company should focus on what it can control. So we focus on our operations, safety, quality, keeping our customers happy, and producing both aluminium and copper for the market. I think the top line, as you very much know in our business, is decided by macro forces like LME prices of aluminium and copper. So I personally believe that peak performance means maintaining our operational excellence at the level it has been for the past so many quarters. And I'm quite sure that that peak performance of operational excellence can be maintained.
Interesting. You know, because I'm looking at the business on a per ton basis, upstream are doing $1,700 per ton, which is fabulous. Do we work with a little bit of a lower number if you want to give us a range on a per ton basis?
So I think that, again, I'll repeat, I cannot sit here and predict what prices will be on a month-to-month or day-to-day. What I can assure you is that we will be producing at a very good cost of production with the right quality for the market.
Okay, let's finish the India business then. Copper, you've been telling us realistically, the number should not be that 700 crores, 800 crores per quarter. This time around, it was closer to around 600 crores per quarter. Looking at the TCRC spreads as well as the value addition, do you think that on a quarterly run rate, this is what you will be looking to maintain?
Yeah, absolutely. I think that the 600 crore per quarter is the run rate that you will see for this financial year, largely because, as you said, TCRCs have dropped dramatically. But, you know, we are supported by the value chain of copper, the downstream of copper that's coming in place. So our guidance of 600 crores a quarter for copper, we maintain for this financial year.
Okay, all right. There's one more aspect, Mr. Pai, that I wanted to understand. Because of this entire trade tariff battle, you all have already guided the market that there will be a hit of close to around $40 million on a quarterly run rate. My question to you is, if in case this gets sorted out, then I guess you'll save some part of that $40 million per quarter. But also the Midwest premium that moved up from around $450 per ton, that moved up all the way to around $900. Is there a risk that that comes down if in case this trade war comes to an end? So how do both of them offset each other? You get a benefit because of the import, but however, the premium as well will come down. So how do these stack up against each other?
So look, net, what happens is that the 25% premium that's there on most countries is what's built into the Midwest, and hence the Midwest went from $400-500 to the $800-900 that you see today. So I think that if the 25% stays on each and every country, then the Midwest premiums will stay at those levels. But what is probably going to happen is that different trade deals on a bilateral basis will be struck. The UK-US was the first one, and we are hoping that India is going to be the next one. So I think in the coming months, you're going to see a lot of trade deals being struck. The net exposure of Novelis today is Canada. So we are waiting for the MCA 2.0, which is the Canada-Mexico-US deal to get settled out. So if that does get settled, then we have net. I go back to what I used to say the previous quarter, neutral to slightly positive impact on our business.
Got it. Okay. All right. Yeah, that's the hope out there because, you have said that in the past as well. It'll be neutral to mildly positive. Got it. What about capex plan for this year? What is the amount? Because for the next 2 years, we are building a higher capex number. So what is that number? And what does it do to your debt number? That's come down because India's net cash, there was some working capital release as well, which has contributed to this net debt number coming down. But how do you see both these two pan out, capex, debt?
So on we did an investor day in the first week of April, and we announced a broad strategy which we call doubling down on upstream and taking the downstream EBITDA to a 4x. So the downstream investments have been done in the last 3 years, and we are now embarking on a 45,000 crore upstream capital investment program. So a new alumina refinery, a copper recycling plant, a copper smelter, an aluminium smelter. So the next 3 years are going to see a big upstream capex program. Our capex for this current financial year, FY26, is 7,500 to 8,000 crores. And over the next 3 years, we'll be spending that 45,000 crores. Now, we have, as you said, a very strong balance sheet in India, and we think that we can do this capital program without going above our net debt to EBITDA guidance, which in India is about 1 to 1.5. We will not breach that.
Final question, sir, on Novelis. What could be the broad range on an EBITDA per ton basis? For the year, if you tell us what could be the lower end and what could be the upper end?
I think I'll tell you that our target is to get Novelis consistently about $500 per ton. And we hope that during this year, especially in the second half, we'll get there.
Okay, all right. Well, the markets